Welcome back to this another live session from Forex Trading Wizard Academy. Another trading day and week. We have seen yesterday FOMC massive move as expected. We have seen there was a massive breakdown as with the FOMC, which happens. Fed likely to cut rates again in October, and three other things we learned from Powell's press conference. So we can see that the market reacted more than expectation with the FOMC. And now what we are at in this market here, if you guys look at after the FOMC, coming up later today in just a matter of 20 minutes, unemployment claims. And that unemployment claims is gonna be another big one that looking at in this session to trade as usual. And that being said, let's begin another trading day. Are you guys ready for big one? I'm looking at everyone is here. Thank you. Waiting. Hello. Welcome. Hi everyone. Hello. Hi coach. Welcome. Thank you very much. Your audio is really nice, loud and clear. Thank you very much. Thanks for confirming. And here is what we are looking at the moment. We can see that on the table there is unemployment claims. And tomorrow coming up, three very high impact news on JPY. So that being said here, what we are looking at here in this market, that this is a long-term bull market. If you guys look at it, you can see this is the monthly price action where the market is in a bullish impulse that you can see. I'm going to look at the monthly and weekly quickly, which is showing that significantly bullish. And daily market, we have seen after yesterday's drop with the FOMC, today another move back below, and the market after break of this low has got that reaction back to the upside here. And with that rejection on gold that we can see here in this market, what you can see, the market is in an uptrend here. There is an impulse correction. The market is maintaining this series of higher high and higher low, which is in an uptrending market structure. Here is the move that you can see from here. A complete break above with one single bounce. Now, what I'm looking at, guys, here is the market structure. Thank you. Hello, everyone. Good day. Ready for another one? What happened for 3 free giveaway from FOMC session? Welcome. It will be announced on the Telegram channel. So if you guys want to be on the giveaway for the FOMC, we will have 3 giveaway coming up. And you can join the Telegram right now. There will be giveaway coupon will be sent on the Telegram. For those who will be taking the first step, will be in that. So the coupon will be sent. The first one will be used by. So I'm sending the free Telegram link here. So there will be few numbers will be taken from the Telegram to the premium group using the giveaway coupon. So I've shared the Telegram. I've joined the Telegram while ago. Welcome. Thank you. So there will be an announcement on the Telegram how you can get access to the premium. Now, while you are looking at that here, that I'm looking at the moment in the market, and are you guys ready for a big trading day? After the FOMC, you see the market pretty volatile. Now, this word that I more often use, why we need volatility, because when the market is volatile, the market trends, right? The market trends, and that's what we need as a trader. a market. Wait. Hope that things are clear. Okay, thank you. Now, what we are looking at here in this market, this is where a bull market. You see that from here, it's another support level. Now I'm looking at this channel that you guys can see. This is a bullish channel. Now we can spot this bullish channel. Ready to go? Yes. Ready to go? How many of you ready to go? Okay, look at that here, guys. You can see that with this bullish market. Now in that bullish market structure, what we can see from here, from this support, an impulse back to the upside, followed by straight drop to that support level. Welcome. Now this drop that we can see during the FOMC, the price reached that 10 EMA after the crossover. It's the first time the market has reached the 10 EMA on the daily for buying. We are still not on it, but looking forward to it. Now here is what we can see, that in that area, this is the support level. So from that support, which is the daily liquidity zone, today's price, we see that there is a stronger rejection. That means strong means in the major direction of the trend. A stronger rejection means that potentially resuming an uptrend, but we don't want to be too optimistic too early, as we want to see the market again pushing down for another pullback here. And here's the 4 hour that we can see in that zone. This is the intraday rejection here, and with this intraday rejection, that what we can see in that market, this is a support level, and support, bounce, support, bounce, support, bounce. So we can see the market is maintaining, this is a resistance, the market is maintaining that series of higher high and higher low, which is in an uptrending market structure. Now what we can see, this is the 4 hour bullish engulfer. The market has crossed, this is the FOMC move with a massive, almost nearly to 280 hour candle, and the market overextended from the 280 hour and then got rejection back again. Now the current 4 hour candle, if you guys look at it, you can see that it didn't move much in the bearish direction. That means there is a possibility for upside again, as this is the intraday resistance line where the market is approaching that key level again. So looking at the 1 hour, what we are looking at in this lower time frame, from this support level, which is stronger impulse, narrower doji, expecting the market to possibly to drop further and then to return again to the major direction of the trend. Now here is this impulse. You guys can see that this is a massive bullish impulsive move back to the upside on gold, and that impulse on the gold that we can see the market has made, which is with this impulse, what we are looking at here, the market to pull back and then to return again to the major direction of the trend. So that pullback that we can see in this market with this doji, expecting the market to possibly to turn back down here, and that's what we can look for possible entry. Now if we look at the Fibonacci, this is the 1 hour perspective, nearing to the 38.2% is here, so we can look for further confluences along this area. Now this is the 15 minutes structure on the lower time frame, which is also the 4 hour low. Now this is the sessions low as well. Now I'm looking at here on the sessions low. It's a bull market, and you can see there is a very sharp rejection to the upside in this market. So the market coming here for possible break below, that will give another bullish entry in this market. Now there are two probable scenario is to drop again to the order block, which is what I think less likely. We might see that potential bullish continuation here, because this doji, the market may range in this doji quite a while, and we see that this is a big doji has formed during the FOMC spike, and this is the high of this doji where the price dropped from this level below here, overextended. This is an order block. Smart money bought from this level. Now if you guys looked at that yesterday's FOMC live, this is what I have discussed, that the smart money possibility to buying from that level, the market to drop to that level. And now what do you see, that the market here, this narrow price action here is order block. Okay, order block are very important, because this is where the smart money potentially has bought in this market. Yes, news coming up in few minutes. We are seeing that unemployment claims coming up in 7 minutes. So that's gonna, of course, will have reaction in the market. And if we look at, we can see the market is here is the high, the price dropped to that low, bounce back to the high, drop to that low, and with a multiple doji formation here on gold. This is what we're looking at here in this market. With a big drop to this, from this high here to this support level, bounce back to that, and again drop back to that level. So it's maintaining this uptrending market structure. And with this uptrending market, as it's a bull market, we can expect this market to continue to trend again. And for us to find that entry, what we need to look at here, guys, is a breakup structure that we always trade successfully. Welcome. And if you look at the 4 hour here, this is the current support level from the 4 hour, 3364.53. Now if the market, if you look at the spike coming up in 6 minutes, if the price coming back below 3364 level, we will be looking to that entry. Now here is, if you look at the structure, big bullish structure, and in that bullish structure the market, this is clean impulse, narrow correction, another impulse, deeper correction. The market is maintaining this series of higher high and higher low, which is in an typical uptrending market structure. Now this is the current session's low here, and we're also the 15 minutes 20 EMA, where the resistance turns support, and from that zone the market started to trend again in the major direction. So with the candle close, what we are aiming here for the market to potentially to break that recent low here, especially if the spike coming below here, we are on the trade. Okay, so I'm looking for, you can see this is the 5 minutes structure also has created. So this is our current entry level. Now why this is the current level that I'm looking at, or we are looking at for entry? Let's look at the context. Sessions low, liquidity zone, a very important support level. All right, so here is the market is with this impulse back to the upside, which is a big impulse here. If you guys look at it, you can see from here, correction, another move, sideways. What we are looking at here, this market to drop well below to this nearest support level, and that support, we can see the market to penetrate below here and then to return again. Now if the market not coming here, then how we will be restructuring our entry is from the new market structure, especially looking at the 1 hour here. Let's look at here the lower time frame. Sessions low is important. The way the market structure has built in this zone here, which is short term, at least it's a bull market. So now if there was a news, you'd look for placing the pending order in this sessions low, but as there is a news coming up, we have to be patient here. The way the market structure form, if you guys look at it, you can see it is one single impulse correction, another impulse, deeper correction. The market is maintaining this series of higher high and higher low, which is uptrending market structure. And in that uptrending market structure, the market is maintaining this move potentially back to the upside. We want to see that liquidity grab. That's all we need. Directionally, we are biased to the upside because it's a bull market. What we need here is that the market to cross this low here as with the spike, which we could see eventually. If that's the happen, As soon as the spread normals, we can look for entry, and we will be using the buy limit again once it shows up. Okay, we see that break below. That's a break. And what's the data has come out to be? Okay, 231k. So unemployment claim drops, which is positive for DXY. That must have given some momentum on dollar index. If you guys look at it, you can see after this long bearish move, the market has momentum here, and that reflection on gold is potentially to be downside here for short term, and it already has dropped well below. So for us to look for that entry, as we have entered in the previous session as well, the market in this area after the crossover, it's maintaining that uptrending market structure. If you look at here, you can see a big move followed by this pullback, another move sideways, expecting the market to break that low here. So what are we looking at? Welcome, welcome. Now, what we see that guys here, the market tested the support, started to move back again to the major direction as we discussed. So let's look at the spread here at the moment. Has that been normal? Looks like spread has come out to be settled. Okay. Now as spread became normal, and okay, getting that reaction back below here, which was looking at. It's broken the support level here. Now it has broken that support. Now is the market is coming straight drop back below this daily low, or it's gonna revert again. Now I'm not denying the fact that there could be deeper drop. Being very flexible is the best way to become a better trader, guys. Keep in mind that if someone tell you that he or she knows everything in trading and the market will go exactly what he or she says, that's a big shit. So always be flexible and humble in terms of trading, because more often you will see that you're gonna wrong rather than being correct. But profitable trader are those not who always become correct, but those who has a solid edge in the market to trade win, almost keeping the edge in your side. That's all you need as a trader. So having an edge means that you know exactly in what situation the market reacted in the past, and you are using that same kind of level for potential entry. Now we can see that after this break the market has, this is a 5 minutes drop. Now this drop could be a return here, or this drop could be a pullback. That means the market is preparing for another bounce. Which one is what we could see that likely to happen here? I would like to see that how the market is reacting to this high. Now if you look at daily, you can see that the daily support is here. The market dropped to that daily support here. Getting the reaction back from the support level, and we still can expect for another retest before it finally bounce off that level. As you can see, the market has broken here from this level, a complete break below, pretty sharp drop to that support level, and with this break of this support, which is a pretty important support level, the market may potentially, now what we are looking at for the price to possibly to drop back below to this level here, to grab the liquidity and then to return again to the major direction of the trend. So this is a key level of support here. And as the market from the 4-hour perspective tested that low, got the rejection back above. Now if it breaks out, we could see the market to potentially to trend back up, and 4-hour resistance also here. So still the market is possible to trade on both direction. So from this high to drop again to the support, or from this low to bounce back again in the major direction. So our here entry must be from any of this previous low. If you look at the 15 minutes, you can see that it is forming a long wick candle. Okay, let it drop again for another test that we're discussing. And as from the lower time frame, from the 1 hour perspective here, the price is coming to that support, expecting it to reject again back above in that level. Waiting on that for the market to possibly to trend down here to break that low, which is, we can see the price again coming for further drop back below here to cross that low and then to reject back again. We are looking at here for this market to possibly trend and then to revert again back to the major direction of the trend from the lower time frame. The price tested this low, expecting to reject again. This is the 5-minute chart here. There is a bullish candle formation with a narrow doji here, and from the daily, we can see that it's maintaining this uptrending market structure, and current level that has created the lower level is 3664.36, and you can see that this is the 15 minutes candle. There is another bearish candle with a long wick. The price has crossed this low, and then now if the market wants to trend again back above, there's a big void here. That's the void is because there is a big imbalance in that area. Okay. Now in that imbalance, what we have seen that the market created this long wick, and then as you can see, this is a support level here, right? Pretty important support level. Looking for an entry. We cannot enter until we see that right entry place, which is the currently 3364.36, and breaking that low could give as an edge in the market. I'm looking for that retest of this support. Okay, so it's still showing in that area, which is potentially a bearish movement in that area. Hello everyone, thank you for joining the live session. And with that movement, that you can see the market slowly melting that pressure here back below, and with that melt, where the support, which is a key support level, expecting the market to drop down here, grab the liquidity, and then to trend. So at the moment, we still cannot certainly say that the market to grab liquidity and then trend. Rather, what we are looking at here, that the market to show that reaction formed here in that area, and which is very important to look at, especially when we are looking at the market structure. We have to look at the both directional bias. I never look at in one directional bias. We can't say always that okay, this market bullish, it's gonna be bullish. The market can behave two different direction at the same time. What do I mean by this? Have you heard of the Schrodinger's cat experiment? the quantum physicist. So according to Schrödinger, that if you put a, like he had a thought experiment, sometimes scientists do that. So according to Schrödinger, he placed a cat inside the box and then guess what happened with this cat after certain period of time. Now there will be two interpretations, right? Either the cat is dead or it's alive. So there might be two group of people after 1 week. If you open the box, what will be the state of the cat? Now that's why it's so different, the quantum physics, than other areas, is that, so Schrödinger is saying that the cat is dead and alive at the same time. That means in a superposition until you open the box. So it's the coexisting of the multiple outcome at the same time. That is probability. More precisely, quantum probability, right? So this is what the market is doing here, right? You see it dropped. So until you open the box, you don't know either the cat is dead or alive. Until the price reach there, you don't know either the price will reach there or will start to bounce back up. Then how do you make your trading decision? So that's why I do not respond to some of the questions. What price level? The price level is not important. The important here is how the market reacted to the price level. Imagine that you are in a group, in a big group of people, right, who are sitting like in, if you go back to 150 years, 200 years, in the time of J.C. Livermore, for example, how did they trade it? Okay, they used to use it's called the pot shop. They used to go to the shop. There is a blackboard or whiteboard. That time the blackboard, and they write all the details on the blackboard. People's like a school. If you go to the school like that, they sit on the table and they raise hand to buy or sell. So it's a pot shop, right? That's how the trading worked that time. Stock trading. There wasn't Forex that time. So the smart trader, what they did, they didn't do anything. They just looked at, observed that how other traders are reacting to certain price, and based on that they make their trading decision. So either there are two things. You can create an action to experience, or you can choose to experience. Choose an outcome or pick an outcome from the chosen given setup. So if you look at here in the same way, when the price is on the support, the first thing that we need to look at is how the market has come back to that level. That means how the traders are reacting to that price on that particular level is the determination of either we will be buying or selling, because we need to see what others are doing. How do you see? You might say, okay, we only see candles, but those carry information, right? Everything carries information. Everything is in fact information. If you look at, what do you see? That black, red and green candlestick pattern, but they are information. Each candle has vital information, buyers, sellers, range, volume, and everything is there. That's all you need to decide your trade. Now, and that information is what we need to enter into the trade, though you may not be always right, but you just need to be over 50% for a one-on-one. Even you can be profitable by being 30% of the time, even 20% of the time, by being correct, depending on your reward. Now, that being said, here, this is the 1 hour price action, and the candle closing, if you look at the 1 hour, you can see it's a doji. Now, this 1 hour doji is potentially can be bearish market here in that area. Still, the market structure is showing that it can be still bearish. So I'm deleting the lines to refreshly look at the chart. Because if 1 hour doji, this candle closed as a red bear candle, we may see the market to drop. Still, we have 2 minutes to go. How the candle closing is important, of course, to see that overall market structure. Or the next candle can be also another doji being formed beside here, and then the 4 hour close potentially as a narrow doji. Okay, so both directional bias is still there until we get confirmed from the lower time frame rejection here. Hello everyone, thank you for joining. Okay, it crossed that low. If you guys look here, you can see it's the 1 hour market structure, which is big long doji here, and that's the sign that we might see some bearish move in the beginning here in this market. And it is still possible for this market straight drop well below here for another retest of this long-term support. Complete breakup support here. Okay, it's a full drop. That means there is a possibility for break below here. Still there isn't any directional bias has formed in that area. What's your bias here? You can share your thought. Do you think that gold is going to trend here with a one single move pullback, another move deeper pullback, or we could see the market to trend down here to this support level? Detailed explanation. Take care. Caution. I think trend down. Yes. So this is after this break of this high. As if you look at this, unemployment claims has significantly changed the market sentiment here, because when the unemployment claims drops, that means that better job perspective that has fuel the DXY, which is mirroring on gold. Now the way market structure has formed, which is showing that possibly to be bear market here, and because it's a bear market in that area, for us to potentially sell, we want to see the market reach this key level. It's being reacted here. With a 1 hour bearish engulfer, the market from this liquidity zone, you can see it's got that rejection again. Create a very interesting complex structure here, which is pushing the price come back well below here. Now this is an imbalance and the market is feeling that imbalance. That means because it started to drop aggressively, most likely now we could see the market to again come back to this daily low and potentially to even penetrate that daily low to bounce here. And the market is, if you look at from this level, this is a drop, pullback, and expecting it to come back now. We see the 4 hour, this is the 4 hour price action, which is possibly to, I think now, to straight come back below. So at the moment here in that area, because it has broken the structure below, we might see that penetrating the previous session's low here. And in that circumstances, we will be looking for sell if the price goes back up to the resistance line. This is a massive fair value gap here. You can see, okay, this is one zone here. There is another zone. Okay, two massive fair value gap. Now fair value gap is very important. If you guys not sure what is a fair value gap, let me know here. This is the 4 hour, if you look at, and the 1 hour, especially in the 1 hour time frame, you can see after this bearish move, the price has completely broken below, and this is a pure imbalance in this market. So this is newly freshly open 1 hour candlestick pattern. Now therefore a possibility for the market to go ahead and retest this zone is still very high. Now candle close coming. Looking for entry at this level here at the moment, 3363 sell entry. We have seen the 10 and 20 MA crossed over from each other, a bearish price action, which is showing that potentially the market to trend and continue to drop here to this support level. Ready for an entry? Even if you are not, that's completely fine. Take trading completely unhooked, right? you have to be very serious in your risk management plan, while also you have to be very flexible in your trading, because more often you will see that you have to miss many trades to find one trade. This is a paradox. Okay, you have to miss many trades to find one trade, therefore you have to always avoid FOMO. Now this 1 hour candle that I'm looking at before the 4 hour close to create a potentially a pullback to that high, so that we can sell the high to the low. I'm looking at now lower time frame as the market is volatile. It's a volatile market. Gold is in fact always volatile, but the market is now additionally volatile because of the FOMC and also coming a few more news as well. Tomorrow coming up JPY, BOJ policy rate statement, monetary policy statement, and BOJ press conference. So that's definitely reflecting on yen pairs. GJ is pumping back to the upside. How does the dollar yen? Boom, that's a bounce on the with the dollar index strengthening on dollar yen. Okay, look at the 5 minutes ATR. $35 pip, 5 minutes ATR, which is pretty big. So looking for a potential sell limit here for this possible break to the upside. Now, so here I am placing a sell limit. We'll be explaining later in depth the strategy. So place the sell limit here in that area. We see the market is trying to push back here, trying to catch some quick peep, as the market has managed to break below here. From the 1 hour, we can see this is a complete break of structure here, waiting for the price to go ahead and retest and then to return again back below to the major direction of the trend. Now, it doesn't mean that the market will always do that we expected. Looking to sell limit, because it has broken below. Now the trend is showing the downtrend, so you are looking for potential sell here for short term, not a long term. As if the market, because this is a very high liquidity zone, if the price reach that level, from that zone can expect a potential rejection here in that market. So waiting for the price to go ahead and retest. So there is 5 minutes candle closed, one candle closed, which is certainly pretty long doji, and only if this one is bouncing off, then we are on the trade. Otherwise we could see that trend continuation back below. Okay, so as we have seen in that area, the market from this high So we can see that very sharply bear market here in that area. So before the 4-hour close, we may see that potential trend continuation. Our entry here for if the market goes up for this retest, we will be on this trade here in this market. Now here is the market from that long wick doji. With a massive bearish move. 4-hour price action from this high has got the rejection back below from the 1 hour. We can see the market in a downtrend. From the 15 minutes that we can see the market is also trending here in that area. Now this is where drop pullback and the drop narrow pullback. Now we need to look for this breakup structure. We see that very strongly falling market that might straight drop down here to this support. We can see that this is sharply falling market, so therefore the market structure on the 5 minutes changes again. This is the 5 minutes fair value gap. Okay, so where in that 5 minutes fair value gap, and with this fair value gap, if you look at here, you can see that this is a massive fair value gap, expecting it to potentially drop down further to this support level. So current 5 minutes structure that we are looking at has changed. We can see the new swing high has created here, if you look at. So that level from the 4 hour that we can see here, and from the 1 hour, which is in that area. So the market trend is the way it is showing. We might see that straight coming potentially to break this low here today, which is the daily support level. Therefore, I'm going to replace my pending order to here, because if this market going up for another retest to this high here 3361, we will be entering, but we'll be waiting. We cannot expect now to go that far here. The market already dropped well below than our expectation, so now we need to wait for this swing high to be broken. You guys see that how I am looking for trading. We only need to make sure that we understand the trend and then break from the structure in a specific way that I always talk about in this live session and also out of live session as well in the academy. So when you see that a market is trending, what do you need? The first step is to identify the trend. Can you tell me here how to identify the trend? Anyone? Can you respond to how to identify the trend in the market? Very simple. These are foundational, but that could change the way you look at the market. How do you identify the change of trend? Okay, so lower high and lower low in a downtrend, right? Simplest to understand that this is where in a downtrend, the market is maintaining that series of lower high and lower low downtrend. And when the market in a downtrend, okay, so the market in a downtrend, we will be looking for selling in this market, lower low and lower highs. And because the market in a lower low and lower highs, which is in a downtrend, what you can see, anytime that structure is being hit or broken, we can look for potential entry. One more confluence we need to add there, how the ATR has formed in that market structure concerns. And definitely it's an important point that we need to look at when we are entering. So you can see this is the 30 minutes price action. 30 minutes candle closed with big bear candle, and from the 1 hour, now this one, any pushing up for a pullback is an opportunity for us to sell. Now, because there is a massive fair value gap, and it's started to push that down here. You can see this is the fair value gap, and all those, also the trade that I am posting in the group and also discussing, all of them we are looking for this kind of fair value gap to be filled, and that's what we are looking at in the market, to look at that fair value gap. So if you look at here, you can see it's completely breaking that low here. Swing low and swing high broken. Yes, not only broken but also a specific way. We need to look for the ATR. That's why all break is not a break. We need to look for break but not the break. Now we need to look for the false break. You see, because if we look for break, then you need to look for retest as well. We are looking for false breakdown or a false breakout. In another way, fake move. That's where the opportunity, because everyone can read a move, everyone can understand a move, and everyone can trade the move. But reading between the lines, when there is a breakdown but there is not a breakdown, which is a false breakdown, is where the potential trading opportunity, because very few understand what is happening. If you see the market had a breakout, by your eyes you see that it's a bull market, but on the other hand it's a bear market because there's a false breakout, and identifying that false breakout will give you that huge edge in the market, and that's what we are discussing here. So when you see the market has broken the swing high or swing low, basically you found that false breakout or breakdown zone in the market. So the previous swing high here is 3361, and as the candle close coming, this is 30 minutes. It has completely in that direction of the fair value gap. There is no sign of break of structure, but if it comes, that's where you are entering. And because this is a huge fair value gap, you can see that it has entirely dropped back below here. Waiting for that break of structure, that the market is in a complete downtrend, and from the daily that the price again has finally dropped back to this daily 10 EM again. Okay, it's a waterfall. That's complete break of this trend, and it's keep pushing down to without any pullback. And sometimes you'll find the market behave that way because it's a big imbalance here that you can see, and which is continuing in that direction. Okay, so you can see the market has entirely broken this support, which is at now daily 10 EMA, and highly likely we could see the price to break the current 3626 level, which is the recent liquidity zone. And most likely we'll see the market has broken that liquidity zone and then to potentially return again. It finally has broken completely entirely. It still keep coming down, and so I'm looking at the weekly, guys. You can see the price has completely broken the weekly support currently approaching that weekly low here. And this is the weekly low. The possibility for, because there is a 10 EMA on the daily, it's a very high liquidity zone, and most likely you'll see the market to penetrate back below that level. Okay, before the 4-hour close, now time for a potential pullback, isn't it? We can see that it's a complete break. Okay, now we might see some deeper pullback, and when the market drops very aggressively, we only can have an option to stay in the sideline until it settles. So this is the 1 minute. You guys see that I enter only when there is a high probability trade. So it potentially forming an inverted head and shoulder here, could be making a way back in that direction. And as on the daily support, if you look at what I think now, it's on a pullback, and are you going to look for buy? Not yet, because the market trend is still bullish and bearish. Market trend is still bearish, so we are looking still for further downside here. But we can see there is a little change of character here. So the market is slowly trying to create a reversal pattern. With the candle close, most likely you will see the price to fill some of this zone, then either to drop again or to bounce back to the direction of the trend. As we discuss here, the market to break that low, we can see that drop. Now as the price again pushing back up here, we might see that this market now possibility crossing that high back to the upside again, 3654 level. As of Thursday, we can see tomorrow coming up JPY, very high impact news on JPY, and dollar yen is showing that reflection. We have seen there was a breakout on dollar yen and it completely has broken back to the upside, which is maintaining an uptrend, while also Gbpjpy showing that potentially bullish, and now it's on a pullback. While gold is with the FOMC, we saw that breakdown, pullback, we see another breakdown in this session here, and that trend may continue here, or we could see that the price to, you can see it's getting again reaction back from the high. There might be a potential reversal here, but until we confirm, we have to wait for that to see how the market is reacting with the candle close on the 4-hour time frame as well. This market even possible to be have a deeper reversal here. If you look at the weekly, you can see the price is on the weekly support in that area. So the market structure is being formed on this lower time frame is here. Of course, we can see that is still maintaining that bear market. Okay, so you can see it's here trying to build a bullish momentum, but the trend is highly bearish that we can see. So in that bear market is the price. If you look at the 15 minutes and the 30 minutes, 4-hour candle, from the 4-hour big bear candle, Okay, here what you can see from this high, as the market is highly volatile, we can see the market from that zone started to create that structure in this area. So is the market reversing from this level? That's a very important question that you need to ask, as there is a one single rejection from this level here, and that is where, if you look at with this 1 hour long wick candle formation, most likely you will see the price to fill that zone, which is regular way to react to the market, to fill some of this long wick. But at the same time, if the market prepared for a bigger reversal, as it has crossed this fair value gap, we may see the market to continue to trend back above to this resistance line. And so gold from this high, is the market, because there is a, if you guys look at it, you can see this is a big long wick zone here in that area on gold. And if the market is getting that rejection again from that high, where 1 minute bearish engulfer is being formed here, we could see the market to again drop back below this support level. And it's a bear market at the moment, so what I'm looking at, guys, here to enter possibly a short-term sell opportunity. But it's still not yet. You can see the price is again getting reaction back above. We might need to enter by market. If we look for sell here, I'm going to sell gold from this level. This is a market order, placing the previous pending order off. Stop loss at 3649.63. As the market is trying to fill that zone, I'm selling gold here in that area. Short on gold for a quick scalping, and I'll give a shout out as soon as I will close any profit here. It's coming down. Right. As soon as I'll be closing, I'll give a shout out. I'm closing out right now. This is, you can't say faster than this. Around 28 pip profit I have secured. It might go up again if your trade is not in profit. You can choose to wait for the market to show up. We might see that the market to fill that long wick here again in that area. Okay, here the market, how it is building the pressure in that area. If you look at it, you can see this is a doji, and this is a pin bar. The way the market structure is forming, what I think the price possibly to continue to trend here without retesting this support, the market less likely to create a new higher high. So lower time frame market structure that you can see, it's forming a doji here. So can you give feedback, guys, in the live chat? Have you had any profit here? Gbpjpy, nice scalp. Yep. Thank you. Absolutely. Absolutely. Yeah, it's a very quick scalping trade because the market is very volatile and we can take those kind of I do scalp, as you know that we have a separate scalping group, because that's how the emotion in checked, and the market, when the market is moving, we are certain about the directional bias. Why not taking that quick gap movement rather than going through big shift in the market? When we do take the big trades as well. This is a scalping session. We are on this scalping, and another session. And yesterday we had 3 sessions. We had trades as well in previous session. Tomorrow, Friday, last day of trading week, I would like to do a special event and also giveaway session tomorrow. So if you want to be part of the big trading community here, join tomorrow for the giveaway session. We will be conducting giveaway in this live session. Thank you for joining here, and I'll see you again very soon, guys. Trading live together. Until that, stay well, stay happy, keep learning, keep growing. Don't feel that trading is hard. It's easy.